So welcome everybody. This is the Emerging Markets panel. Thank you all for being here. Second day, 3:30 in the afternoon. Jauad is in Morocco, and the reason he's there is he didn't get a visa to come here to the States for this event, which is kind of sort of underlying everything. We have to sort of acknowledge that we're living in very difficult times for clean energy, for international relations, and this panel takes on more importance with the geopolitical backdrop, but what I wanted to do today is introduce the exceptional panel we have. Liilnna is here at Duke. Craig and I have known each other for 25 years, and Jauad is in Morocco. And the idea that we're trying to sort of talk about is there has been a lot of work that has gone forward in many, many emerging markets. But the future challenges are even greater than the past challenges. And one of the themes that we discussed when we were preparing for this is how policy changes really drive investment. And when policy objectives are followed by good rules and regulations, financing flows. And the example or the metaphor I like to think about is capital is like water. It looks for the least resistance. And so if you lay out the conditions for good investments with policy backup or credit enhancement, then financing follows. So what I wanted to do is sort of start with Liilnna and go to Craig, and then Jauad, you're third, and just have yourselves, introduce yourselves. I'm JP Moscarella, co-founder of an angel club in the DC area called Resilient Earth Capital. I have done emerging markets since I was born. I was born in Mexico. And I've worked in probably 40 or 50 countries over the years. Most recently, I lived in Brazil for 5 years. But now I'm looking at India because it's got a huge energy challenge. It's got to electrify the whole country, and it's going through a big decarbonization phase. They have a net zero plan for 2070. And so it's a big challenge, and I like big challenges, so we're trying to structure it as a blended finance. But I've done a lot of work also in other emerging markets, and Africa comes to mind as having, a real demand to sort of bypass a lot of the technologies that we've thought were in the past and now may be coming back. But it's a really interesting moment when we're seeing demand growth so skyrocketing in the U.S. When I started my career in the early 90s, demand was flat in the US, so we had to go to emerging markets. I worked for an energy developer to find new growth. And so that was the story kind of underlying why we all went to emerging markets, because growth was going to happen there. And that was a really important part. And then, of course, we had the Washington Consensus. Not everybody loved it, but there was a lot of privatization, so there was a lot of opportunity. Today, I feel that we're in a very different position. The growth is here. There's higher growth in emerging markets, but it doesn't seem to be worth the risk. And that's what I wanted to talk with the panel today. And what I mean by the risk is sort of the macro risk, the geopolitical risk, the security backdrop, and what we can think about to make that a better value proposition to international investors and national investors. And so my thoughts are, let's sort of talk about what those contexts are and see if we can share that with the public. But first, introductions. Liilnna, you go first.
Good afternoon, everyone, and thank you, JP, for this very good opening remarks. So my name is Liilnna. I'm a senior policy associate with Duke University's Energy Access Project. Some of you may have seen me in the morning, so bear with me. At the Energy Access Project, we work on accelerating sustainable energy access in low and middle-income countries. We do it through research, partnership, and also engaging with policymakers in private sector. And a bit about my background. Before joining Duke, I'm an Ethiopian national, and I worked in Ethiopia for most of my life. So my last job was working to develop mini grids. I will talk about it a bit more later. And I've also worked on with IPP, so trying to develop large scale solar plants with Enel Green Power. And I've also did some work trying to provide like legal and regulatory support to investors overall, like trying to invest in the energy space and extractive industries. Thank you.
Great. Well, thanks everybody for coming to our session. I know it's late in the afternoon. Craig O'Connor, I'm Director of International Business Development Strategy at Nextracker, where I've been since January of 2004, 2024. I am old, but okay. Before that, I was with the Export-Import Bank for 31 years. I was the bank's, the first 2 years I was there, I was a loan officer for the Middle East and North Africa, which was a fun job. But then they created this new program. They said, we want you to be the bank's environmental liaison officer. So help us grow our portfolio in water treatment, renewable energy, those sorts of things. And so I also have another, to keep myself out of trouble, I have another part-time job. I'm also an adjunct professor at Georgetown University in international business. So, and I started that in '97. So JP talks about globalization. And, you know, one thing about, there's a lot of things about getting old that aren't very good, like my jumping ability, my jump shot is terrible. But there's a lot of things that, you see a lot of things happen. You know, for example, you might see your team win the Super Bowl after 50 years, Kansas City Chiefs. The other thing is you could see globalization in real time. A friend of mine, told me at graduate school, hey, did you hear the Berlin Wall just fell? This is November of 1989. I thought the guy was at happy hour too early, because none of us would ever believe these changes. So globalization meant massive investment in infrastructure. And it's changed, but it's still happening to a large degree. So I'll tell you more about Nextracker in a second.
Jauad, please, you go next.
Hello, good afternoon. Thanks a lot, GP, for having me. My name is Jauad Kharraz. I'm the senior associate at ECCO, which is an Italian climate think tank. We work mainly on energy transition policies and advocating for climate diplomacy in the Mediterranean region. Right now, we are working on boosting renewable energy capacities in the Mediterranean to reach 1 terawatt by 2030, working together with the government, with the financial institutions and think tanks and developers, etc. Before that, I've been executive director of the Regional Center for Renewable Energy and Energy Efficiency in Cairo. So have been supporting the Arab countries in their energy transition journey through developing policy, strategies, master plan for power system, and so on. Thank you very much.
Thank you, Jauad. So, Liilnna, I'm going to start with you, just to put you on the spot. One of the biggest challenges that we have is sort of 2 billion people have low or little access to electricity. Energy access is a term of art. And then if you look at it from a business perspective, you find that selling to those customers is quite difficult and challenging. And I'm wondering if you could sort of share your work experiences as well as your thoughts on how to make, how to solve that equation. It's a very challenging one. I've looked at a ton of microgrid business plans. I rolled one out for Haiti, and then of course Haiti exploded. And that was really very disappointing and also sad, because we had done a ton of work to install all these microgrids on the island. And there's other business plans in Ghana and Nigeria and other places where you had these sort of concessions for rural electrification, energy access. And they were very challenging. You could get a feasibility study done, but it was very difficult to get the financing or the investment. So I'd love to share your experiences with the crowd and your thoughts, more importantly, and your work at Duke and how that fits all into that. Yeah.
Thank you for this question. Actually, I think this is very relevant, even following up on the earlier conversation on how demand is really growing here. Like the challenge, I think we have said it, it needs to be contextualized. Of course, I'm going to give more context, but we don't have enough demand in some of these mini grids. So that is a problem. Like we have a lot of mini grids being built or like a grid expansion being planned, but sometimes you'll go to certain households and like we don't have all of the appliances. The households do not have appliances to take on that electricity, which is bad for if you're a developer, whether mini grid developer or large scale developer, your business is to sell electricity. So if no one is buying that electricity, then you're not going to be commercially viable. Mm-hmm. So this is a a challenge, but also that's why we have this all innovative approaches. For example, trying to stimulate demand. We have had a lot of
through productive use?
productive users. So that's what I was going to come to. We have had financial support for actually the off-takers. So one of the projects I worked on in Ethiopia before coming here, and we're still actually involved with as Duke in this project, is the distributed renewable energy for agriculture modalities. It's a very long name. We call it DREAM. So it's actually funded initially by the Rockefeller Foundation, later on by Jauad. So the idea of this model was to have an anchor off-taker, which is going to be most of economics in many sub-Saharan Africa is driven by agriculture. So we were going to have an anchor off-taker of irrigation. So farmers who are already using diesel pumps to irrigate, and it made sense
And
to...
the anchor was a business or an organization?
So it's
A community.
A coalition of smallholder farmers.
Okay.
So we have these collectives of farmers who are already irrigating using diesel pumps, but it does not make business case for them because the country is removing subsidies on petroleum. So electrifying these pumps would actually make sense for the farmers because it would be cheaper for them to do it, but also for the business, for the mini grid, it would be taking almost 80% of their electricity because this is a lot of demand on the irrigation side.
Okay.
Which means then households, there would be a cross-subsidization between different segments of customers.
You have cross-subsidization
Yes, in the model.
in the business model.
Yes, between the different segments.
Between the different customer segments. And did it work?
This is at a pilot stage. So, but then I think for Ethiopia, because Ethiopia is like, this is the first time they were trying to do a commercially viable model, but I think this has been tried in few other countries also, trying to have, because there would be different, at the end of the day, we have said that I think no electricity sector developed without subsidies, wherever like subsidies are needed. Right. Where should the subsidies come from? So you would have capex subsidies, you would have result-based subsidies, but you also need to make sure that in the long term, a business model needs to like rely.
Stand on its own two feet,
Yeah. Initially, subsidies would make sense, like for the first pilots. But at some point, what we were trying to pilot was, okay, if we have this much demand, because we have, that's why I said I will contextualize my comment on low demand. There is demand. Okay. There are irrigation. There is agriculture processing, which actually is needed in most of these sites.
Okay. Do you think the subsidies, I've always found that when you're designing subsidies as a policy goal, to have a sort of a constant but predictable subsidy over the longer term is better than sort of jolts of subsidy, like a CapEx grant or a big donation. Have you seen those kinds of models work? And do you think we have to do the subsidy route? Because otherwise nothing will happen and these customers actually don't have a whole lot of access to electricity and they're sort of subsistence living, right?
Yeah, I think we can debate on what kind of subsidies, but subsidies are needed because the utility is subsidized. So if we do not have subsidies, we're charging a lower electricity tariff to household in urban areas, which are, we assume, better economic position. And then a mini grid without no subsidy would go to a rural area with low economic empowerment and would be charging higher. But which subsidy works? For example, we had like few countries which had a rollback on subsidies, all the policy predictability issues. So now some mini-grid companies are saying we will not be investing if we don't have capex subsidy. Because if you have capex subsidy, your money is locked at the beginning.
And does the market expect the government to foot the bill for the subsidies, or should international agencies and donors and others, be expected to carry that weight? I mean, how does that dynamic work in your experience? International funding or domestic government?
I think everyone wants to point their fingers to the other organ.
Yes, of course. Everybody points fingers
yes,
at each other.
I think it makes sense to coordinate and cooperate because for the government, in emerging economies, the governments are already stressed financially. Every country is broke, but these countries have had a lot of challenges. So if I'm a national of this government, I would be saying, oh, like we had a lot of issues, people writing op-eds about my government is subsidizing this American company. Because what they see is actually a foreigner coming in and investing and getting a subsidy. So I think it would make sense for development partners to put in some money, but also international. I think I'm monopolizing
No,
this.
it's fine. I'm going to ask Craig some leading questions next. Craig, in your experience, when we're talking subsidies, there's also sort of financial subsidies, and there's also different kinds of financial instruments to buy down those upfront costs. We worked a lot in renewable energies when they were more expensive. Today, they're less expensive, so they have a natural competitive advantage. But there's also sort of, I feel, more competition for capital today than there used to be because of what I'm saying about this demand growth. That's particularly the case for American investors. Maybe Europeans and Japanese have a different view, international. What do you, and you can talk about sort of some contracts that you've done and projects. What do you see today as opposed to, say, 10 or 15 years ago when you're trying to develop more green projects, And then, if you had a crystal ball, how do you see this going with green hydrogen, clean fuels, and others? Is there enough capital in the world to do all of those projects, right?
Now, I didn't ask, he didn't tell me that he was going to ask this question, but he gave me a really easy question. What's different now than 15 years ago? Solar is the cheapest form of energy, right? That's the difference. 2004, when solar was just getting started, the Germans had a feed-in tariff, 50 euro cents a kilowatt. Today,
45 euro cents, 50 cents.
Yeah, 50 cents. And then, today you're getting solar. I think Mexico had an auction, 1.9 cents a kilowatt.
Yes, 2 cents kilowatt.
That's the big difference. The other thing is where these emerging markets happen to be where solar resource is great, right? So we need to get the biggest bang for the buck. And I've got a colleague, Josh Sisney, who's here from Nextracker. He works with utilities. So we heard from the previous two sessions in this room from Morgan Stanley and just from Valerie that let's scale up what's already scalable. So that's the biggest difference. Let's look at what's happened. So Nextracker started by Dan Sugar, who yesterday got his award, Cleantech award, well deserved. A lot of engineers trying to solve a problem of developing a tracker that could get increased electricity from solar. So let's think about this for a second. So with Nextracker, you get 30% more electrons than you do with just a fixed tilt solar. We have a software we call our True Capture system. It uses, I have to look at my notes, advanced sensors, weather forecasting, machine learning, yes, artificial intelligence, self-adjusting tracker. So it's self-adjusting in real time, all the time, feeding data in, it's a virtuous loop. You get another 4% with that. So we're getting bang for the buck in terms of the solar output, the energy output that we need. So just one other point about Nextracker. We just passed a milestone. So we've already shipped 100 gigawatts, and that's enough to power 2 Californias. For the last 9 years, Nextracker has won the Super Bowl of solar trackers. So we've been the world's leader in providing solar track. And let me tell you what a tracker is. I'm not an engineer, as you're soon going to find out. So a tracking system is like the skeleton in the brains of a solar project. The skeleton being the metal poles that go in the ground. We call them piers. We have anchoring technology. On top of the piers goes the tubes. On the tube is a bracket. Within the bracket goes the solar panel. That's the solar panel. And then the brains is what I just described, the software that moves our engine, that moves the solar panel across the horizon. Not necessarily continuously. What if you have clouds and there's no light? Okay, let's go flat so we get diffuse light. Oh, what if there's a hailstorm? Oh, we better go 75% because these big softball-sized ice balls are going to bust your solar panels. So it's that type of technology where you're getting greater output. Nextracker is very bankable. Clearly, there is capital for this. Now we heard from the last session that maybe the solar utility industry
competition for capital.
Yeah, they need to probably combine and maybe raise the price for solar, which kind of sounds the opposite of what we all want, but that being what it is, Yeah, so in emerging markets, let's talk about that. So JP and I knew each other because through my Georgetown gig, we were in India training Indian bankers on financing energy efficiency. And we were very humble. We said, look, you guys know banking. We're not here to teach you banking, but we just want to share some ideas about energy efficiency. India was, in those days, I think maybe 50% of the people had electricity.
Yep.
Today, it's like 93%. India started a national solar mission in 2010. I was going back and forth to Delhi all the time. So I'm really proud of the fact that at Exim Bank, we financed the first ever national solar mission project, because at the time, the Indian banks were financing solar.
Right.
So we were providing 18-year loans, really low interest rates. Even though you're earning the revenues in rupees, you could, even with the hedge, it was still very cost effective. So not only did we do the first one, we did the first 9 because we built the franchise. India's initial goal was for 20 gigawatts by 2022. So 2010 to 2022. They said, this is working so well, let's just raise it. They raised it to 100 gigawatts. We have an operation, we have a Center for Solar Excellence in Hyderabad, India. We're already producing 10 gigawatts a year in India. No, we see it scaling up big time. Where do you get the financing? So when I was at Exim Bank, the largest ever loan for renewable energy, $907 million for Angola Solar, right? So it was US Exim Bank. We had Korea Exim Bank give us co-financing because the panels were coming from South Korea, Hanwha. And in that case, you're thinking, well, Angola, don't they have oil and gas? Yes, they do. But you can export that and put that money in your pocket and use solar for your own needs. And you've got a 30-year fuel price hedge. So no matter who causes trouble in the world, Vladimir Putin or whoever else comes along, you got indigenous source of energy that you don't have to spend hard currency on. You're also developing local jobs in that construction. And if you're like India, and if you're like Brazil, and if you're doing enough of this investing, you're going to get, like we're seeing in the United States, you're going to get local manufacturing. So what's the financing? So export credit agencies, there's a whole group of them within the OECD export credit agencies. They give 22-year terms for solar. They give a 3-year grace period. The interest rates at US Exim, for example, is like 1% over US Treasury, so it's like 4.nothing%. Citibank is one, so Exim Bank can make direct loans. They can also do loan guarantees. So it's full faith and credit of the U.S. government or UK export finance or Sweden's export finance. So 0 loan loss reserves that those banks have to hold back for that capital. What it does is gets long-term capital flowing to emerging markets. And oh, by the way, I know Adam's going to ask me this question later. I'll answer this one question for you now. They can also guarantee loans and financing in local currencies. So how about 100% U.S. government guarantee of a Ghanan SETI loan? How about that? So, all of a sudden it's investment grade, means lower rates, means longer terms. There's export credit agencies, there's development banks, European Bank for Reconstruction Development, there's every region, African Development Bank, Africa Finance Corporation, excellent. Our good friend who made a great presentation this morning, Ms. Myrna from Egypt, Binban Solar, EBRD financed that. That's European Bank financing a project. So there's capital out there. It's just structuring it. And these banks, look, their main joy in life is getting their loan repaid. That's why they are the way they are. Okay, I'm pleading guilty here. So you have to
A recovering bank.
That's it. So can we lower the risk for the bank? So it could be IPPs. We can get into that later. Or maybe for the first couple projects, if you have the government backing it, you can get 100% financing. Get it built, de-risk it, don't pay a bunch of transaction costs up front, privatize it later if you want. The main thing is to get the electricity billed. I guess I'll stop with
pick
that.
up on a couple of points that you said. When you saw those solar programs in India, for example, or in other markets, did that really make a difference? Sort of the way Exim addressed those markets, was that a driver? Is more what I'm driving at.
Yeah, I think so, because the other financial institutions, and let me tell you the secret here. All these financial institutions compete with each other. They all have. So my job at Exim Bank was to grow renewables at Exim. Well, somebody else does that at UK Export Finance, and somebody else does that at EBRD. So there's a lot of competition. So in that case, yeah. other banks are looking at, well, if those dummies at Exim Bank can figure it out, yeah, we can lend for India Solar. So I think, and how do we do those deals? Okay, so the Indian government, they did it really smartly. Every year they had an auction for renewable energy, and they rode down the cost curve like Moore's Law. Okay, we're going to pay this much for solar this year. We suspect that it's going to be cheaper next year. So next year we're going to have another auction. Then the year after that we're going to have another auction. They rode down the cost curve for solar.
I remember we used to bid on those auctions.
Yeah.
And we would forecast the price of the panels and the CapEx in 12 or 18 months so that we could bid a better price today.
Yeah, that's right.
And it was very risky, but we all did it in the development industry.
No, it made sense. And what made it work is this reasonable assurance of repayment these banks look for. So NVVN was a trading arm of the National Thermal Power Company, very creditworthy government-owned utility. That was your source of repayment. The solar panels worked. You had credible people like
government guarantee behind the offer.
It wasn't. They were guaranteeing the purchase. There was a government corporation that was purchasing the power. It wasn't an explicit guarantee. Now, Angola wanted to get. This was their second project that they did. We want to get electrification, and we want it now, and we need to. That's the thing about solar. It's modular. You can build it in different areas. The government said, we'll just borrow it, or we'll guarantee it. We get 100% financing, so you don't have to worry about the price of equity going into the market.
Right.
Right. You get long term, and then again, you privatize it later, and it was very, very cost effective. So there's
that's not the message we were sending in the 90s or the 2000s.
Well, that was different. So the idea in the 90s were, look, let's look at the Philippines. I love the Philippines, but they had borrowed money. They were on what I would call the IMF World Bank diet for a long time. So we'll restructure your loans, but thou shalt not borrow above a certain amount. But you got 8 hours of power, not consecutive. They needed power. They didn't have the resources. So, okay, let's let the private sector to come in and build, own, and operate power projects. In those days, it was geothermal, right? And that worked pretty well. But then, you get high country risk premiums. Typically the banks want 25% equity investment or 30%, and that equity investment costs a lot of money. And then you have...
And it's high-priced cap.
It's high-priced. And here's the other thing. You have financial advisors that the banks want. They also want legal advisors. So, you've got JP's lawyers for the sponsor lawyers, but then you've got Exim Bank's lawyers, and maybe you've got somebody else's lawyers. And, again, those transaction costs can be really high. So the idea is, how do you make, as Einstein would say, how do you make things, simplest, but you get the point.
Yeah. Let me turn to Jauad. Jauad has done a lot of work through ECCO, the Italian think tank, on a number of different areas. And Jauad, I would like you to give the audience sort of your, experience, but not just sort of the case by case, your views on what is necessary, what are the sort of the new, regulations or frameworks to entice investment, and also to sort of from a national development perspective, if we have this policy of net zero by 2050 and I'm Morocco, what do I do to get there? And please sort of share some examples of your experience, because I think it's really relevant.
Thank you very much, GP. Yes, indeed. I mean, I've been working the last years, working in particular with the MENA and the Mediterranean countries in terms of policy and strategy of renewables and energy efficiency. And it's clear that in the MENA countries, in the MENA region, at least we can divide it in three clusters, let's say. So we have from one side the oil and gas producer countries. I mean, like Gulf GCC and Libya and Algeria, so who embraced the energy transition more recently, and they were relying a lot on the exportation, obviously, of the oil and gas. But now they are also, doing a lot of efforts in terms of shifting to renewable energy, and even they are orienting their national oil and gas companies to invest massively in renewable energy project, and they are reforming their subsidies of the electricity and the energy sector. On the second cluster is the countries that are that started early, let's say the energy transition journey, like Morocco, Tunisia, Jordan. So from the beginning, they had a strong political will to go ahead with the energy transition. So they developed the national strategies, national action plan for renewable energy, national action plan for energy efficiency, and they reformed the regulatory framework. They developed also the right financial mechanism to attract investments. They obviously give facilities in terms of land acquisition, in terms of permitting, etc. And this helped a lot in deploying, renewable capacities. The other cluster is the fragile countries like Yemen, Lebanon, where we have a geopolitical situation which more likely, there's instability and tensions or conflict. So at the end of the day, citizens found themselves purchasing, PVs and for themselves. And there was booming of solar, PV in Yemen and Lebanon, for example, and Syria, even for solar pumping, agriculture, or for a different kind of uses. So when it comes to, the policies, so in particular, IPP project development. So in GCC, obviously they are leading in terms of the world lowest prices with several PPA price record achieved, like even 1 cent or 2 cents kilowatt hour, in terms of prices. In Saudi Arabia, a price level of $1.04 kilowatt was achieved for the 600 megawatt Facilia PV independent power producing project. In the UAE, the same, very similar prices was recorded in the 2 gigawatt Al Dhafra solar PV project. When it comes to other countries like Algeria, Egypt, Jordan, Lebanon, Morocco, Tunisia, they have shown a track record in IPP project. And in Egypt in particular, we have been working in the last years. They have signed a good number of PPAs for several PV and wind energy IPP projects. For example, they reached the prices of 2 cents for solar and 2.4 cents dollar for kilowatt hour for wind project. In the Gulf of Suez, where there is a big potential of wind energy, we are talking about 5 gigawatt between installed capacities and the project in the pipeline. So they give lots of facilities to the developers. Financial institutions are very well present, ABRD, EIB, World Bank, IFC. So there is a booming of wind energy project there, and obviously also a project of green hydrogen now, they are in the pipeline. Morocco also has announced several hybrid projects combining PV and solar thermal technology. So you know that we have the CSP in Ouarzazate, which is one of the biggest CSP plants worldwide. And in terms of also green hydrogen, so we have more and more countries having their national policy and strategy for green hydrogen, or developing their offer, trying to attract off-takers, and they are trying to attract, off-takers and investors. The preferred policy option for a utility scale project in the region is the public competitive bidding auctions in many countries. Feed-in tariffs are phasing out for utility scale projects, and the adoption of direct proposal submission proved to be successful for the development of large-scale renewable energy projects in some of these countries. And feed-in tariff and net metering are emerging for decentralized renewable energy system. So, so if we can look at the picture, we can say that we have like 16 countries with competitive bids and auctions, 4 countries with direct proposal submission, 3 countries with feed-in tariff dominating, 10 countries are adopting net metering, and more than 17 countries with APC contracting. So as you can see, very diversified picture. The region also has worldwide flagship solar and wind project. You mentioned Bimban solar park in Egypt, and we have CSP plants in Ouarzazate or in Morocco. In terms of sustainable energy of public funds, 6 countries like Algeria, Jordan, Morocco, Palestine, Tunisia, and UAE, they created public funds for sustainable energy deployment. At least also 4 countries created state-backed private sector companies to invest in renewable energy projects, such as Masdar in UAE or the CE in Morocco. Also,
Jauad, I'm going to stop you there for just a second. You mentioned something very important, which is the auction systems that has been rolled out. Could you explain, sort of for the audience, how that's different from the way it was before with the tariffs and the feed-in tariffs? And can you also talk about whether there's still more barriers to overcome? Because it sounds like things are going very well, but I also feel that there's not been a ton of investment lately in, let's call it, the last 2 or 3 years. Yeah.
Yeah, I mean, 10 years ago, I mean, for example, if I give the example of Egypt, they started with feed-in tariff, and that helped in reducing the price of electricity from solar and from wind. But gradually later on, I mean, they shifted to auctions or competitive bids, so to make them ensure that to ensure sustainable flow of investments in the following project. And the same more or less, I mean, trend. We have seen it in other countries in the region. Obviously, the picture is not that let's say in rose color, but I mean, we have still many difficulties or challenges when it comes, for example, in Morocco, when it comes to private or small scale renewable energy project, we're still lacking like decrees or regulations that allow the self-production and the injection in the grid. So this is limiting the electrification of the industrial sector and many other sectors. So also difficulties in related to the upfront investment in many projects, especially for example in energy efficiency project. I mean, some countries are encouraging local banks to get involved and provide some facilities to the investors, to startups, etc. So still obviously there are difficulties, especially also when it comes to the economic situation that is also impacting. In Egypt, for example, you know that the devaluation of the currency made it a lot of difficulties for the investors. I mean, in the last years. But obviously, in parallel, there is a political will to push the agenda ahead, and there are a lot of, plans to reform still, whether it comes to policies or whether it comes to the regulatory framework, whether it comes to the different, innovative financial mechanisms, including pushing for green bonds or tax facilities and so on. So also in terms of carbon credit as well. So I know in Egypt, for example, they started issuing carbon credits for renewable energy project. So there are lots of efforts, definitely, but again, there are some challenges related to finance, challenges related to the regulation that still need to be also boosted. Another aspect is the interconnections, which could play an important role in terms of giving the resilience and stability to the grid. In Mauritania, for example, they have a couple of renewable energy projects, but they have this great instability, and they have very ambitious plan in terms of green hydrogen project.
Sure.
So it's clear that interconnections right now between Egypt and the neighboring countries with Libya, Sudan, Jordan, and in the future with Cyprus and Greece will help. Morocco have already an interconnection with Spain in 2 lines, and the third line is under study. Other plans with Portugal and Mauritania. This will help. But again, some tensions, for example, between Morocco and Algeria are limiting this kind of regional integration, if I can say.
Let me stop you there, Jauad, because I think you brought up something really important, and I wanted to sort of bring this up also with you, Liilnna and Craig, which is we're going to be faced in a world where there's going to be competition, and so domestic sources of capital and sort of creative new revenue streams, and Jauad talked about carbon credits a little bit. Those markets are still very incipient. I don't know that you can really rely on it for massive, but I feel that many of these countries should try to stimulate more national or domestic players to invest in their green energy transition or just the energy transition. Do you want to comment a little bit about that, Liilnna, in your experience, how to find new revenue streams? Because if you're depending on sort of philanthropic capital or foreign direct investment, you still have to sell your country. Whereas if you're a national investor, you don't have to sell your country and you don't have the FX risk. But I found that those sources of capital are quite difficult to come by, the national investors. And is there enough, or, is that really, should we bet on that? Is that something in emerging markets? If I'm sitting there, some of the bigger emerging markets have very sophisticated capital markets, Brazil, India, a number of other places. But many or most of them do not. And so it's very difficult to do capital formation in order to deal with the challenges of the growing demand, right?
Good question. So I think
Your thesis.
if I decide
We'll have an exam next week.
I think at this point, we can think of it as complementary because when you say, for example, Brazil, India, they were not in this position 30 years ago. It's a process. So now in many developing countries, at least even in my experience in Ethiopia, like Kenya is like relatively developed actually. Yes, Kenya is a good example actually. They have a good capital market. So they have a lot of like ingrown like local investors trying to invest in okay, you cannot start with 100 megawatts, but you can actually start investing in small scale energy, actually last mile investments. So where you are actually using your capital markets, but also investments, private equity from different sources. So that could be so my point is in short is now it could be, we can think of it like one complementing the other for larger projects also. Like, for example, the government in my country are setting up few funds where historically in many of low and middle income countries, it's a state funded, a lot of investments are funded by the state. Right. So the state, yes, public sector.
So public-private partnerships?
Yes.
Did you see that public-private partnerships, is that a model that you see working for distributed energy, for example? Or is it more infrastructure?
I think it would be better for infrastructure to start with because the amount of effort required, all the transaction fees, everything, we cannot have the government public funding going into small and also crowding out the already existing a smaller private sector in these economies. But at least when we think of infrastructure investment, the big generation or transmission investments, we can have a government coming in and funding, co-funding, or providing some sort of facilities. While in the smaller scale distributed energy, they could be setting up some sort of funding mechanism, but also there could also be a space where with a growing middle class economy, I think I'd see a lot of opportunities for local capital.
Craig, do you want to sort of weigh in on this debate?
Well, in some countries, you have to kind of jumpstart the market. And a couple of things come to mind. For example, the International Development Agency, that's the arm of the World Bank. The World Bank's actually four entities: the Multilateral Investment Guarantee Agency, IFC, that does private sector, IBRD, that does middle-income countries, and the IDA does loans to poor countries, and that's, depending on the year, less than $1,300 a year per capita income. So IDA can lend for 40 years, have a 10-year grace period, and a 0% loan. Sounds like a nice student loan to have or a mortgage. And what you could do with that, and what the IDA did, is they lent to, for example, the infrastructure development company in Bangladesh Limited. So they capitalized them, and then, so now they had capital they could lend for projects. They did the same thing for a hydro project in Laos that gave the ability of the government to own part of that hydro project. And what they were doing was they were exporting power over to Thailand, and that's how they were actually earning some hard currency back to Laos. So it's almost kind of jump-starting it. There's a lot of money on the sidelines, right? The sovereign wealth funds, the Norwegians, the Saudis, just enormous. So the idea is the idea is how do you get the money? How do you get that money off the sidelines, right? So it's not football season, so please forgive me. But if you want somebody to get in the game, you got to call a play for them. In other words, what's the play for the sovereign wealth fund? Well, maybe it's long-term investment into energy company in Burkina Faso or Laos or the really tough countries, or maybe the Rockefeller or the Gates Foundation. Hey, why don't we blended finance? Why don't you lend with us? Patient capital. You're essentially buying down the cost of electricity for folks, is what you're doing. Hey, here's an idea. Mohammed Ibrahim. I don't know if that name rings a bell to you guys. It does to Adam. Yeah, so he started Celtel. He used to work for, British Telecom, and he had an idea. People thought he was crazy. I want to create a phone company and provide cellular phone service to people that, poor folks that are working in agriculture and others. He saw that with cellular phone service, people could change their incomes. they could change their life. And so
Right.
part of it is, what could you do with
What we were talking about earlier with the productive uses of energy to
Yeah, that's right.
yeah.
Yeah, I mean, there's a lot of things. You know, my good friends at the Islamic Development Bank in Jeddah, how about if we have an Ajara? How about if we lease solar energy to a country, right, where it's an operating expense for the country, and you know, the Islamic Development Bank owns the asset. There's a lot of, we need to run some plays, right? This is where you need Andy Reid. No, but you really need some plays.
Jauad, did you want to join and add any more comments, or else we'll ask for some questions from the audience, if there are any, and if not, we'll continue our conversation. Jauad?
Yeah, I mean, no, I mean, we can take questions if you want. I almost mentioned the what's happening in the MENA region, the what led to this competitive prices of electricity from renewables, and obviously still there are challenges. But again, when we talk about green hydrogen, green ammonia, I think there is a big potential. I think the imminent application is green ammonia because I think there is we in Morocco, for example, we produce a lot of phosphates, and obviously that's with producing green ammonia locally, that will help us in terms of the fertilizer industry and ensuring food security, not only Morocco but in the whole Africa. I think the potential is there, but obviously we are waiting for the technology to evolve in the upcoming years to make the price of kilogram green hydrogen affordable. Hopefully 1.5 by 2030 at that time. So I think we are ready to start producing not only for the local demand, for the local market, but also for the international market, in particular EU and Germany in particular.
Yeah, absolutely. I agree. Questions? Anybody feel like? Yes, please. There you are. Our friend from Ghana. I'm a big fan of Ghana.
Thank you. We'll go visit together.
My best friend from business school was Kofi.
Oh, I see.
Yeah.
I see. I'm Kwame. Yeah, so my question is general, and anyone can respond to it. So, Craig, you talk about creating markets essentially with the analogy you made about the place, and you also talk about the productive uses of the energy that you supply. Obviously, with such things, you need a lot of capacity building locally. And so do you typically do that on your own, or do you find sort of partners to help create those use cases? With the example that you made with Mo Ibrahim, where he wanted to bring a new concept that had prior to him being unheard of in that place. Obviously, you don't just show up and make it happen, but you have to actually, catalyze it by building a capacity over there. So in your experience, have you either worked with partners or have you done it yourself in terms of the capacity building?
Liilnna, if you want to go, then you go for it.
I'll take a quick stab at it. So, again, Nextracker was started when, Josh? 2013, or is it? Yeah, around 2013. In a very quick period of time, we're up to 10 gigawatts of production in India, and that's because of the nature of the market. And so, we're training people. There's construction contractors that we're dealing with. The nice thing about solar is it's very scalable. We do this PowerWorks training at Nextracker, and I'm not somebody that you want fixing things for you, just saying, but even I can build a little solar project because it's so modular, and so you can employ labor easily. I mean, you can purchase steel from the country. You can build centers of excellence. So there's no question that if the government says we want solar, we want a gigawatt worth of solar, we want different expressions of interest, and you can again call the play any way you want.
Markets
maybe the government says, you know what, like Brazil, we want 51% Brazilian-made content. So
turbines,
yeah. So they do that for solar. So you get special advantages, right? So the carrots, you can create carrots. Like, okay, this is what we want. We want to jumpstart this industry. Once you send the signal to the market, then you're going to get the result. Oh, that's the play. Okay. Oh, we need technology transfer. We want to own part of it, right? We don't want somebody to come in and build it and then leave a bunch of workers behind and that's it. we want technology transfer. We want a buildup. So we've seen it. We've done it. We've done it in Brazil. We've done it Saudi Arabia, India, Turkey, probably Egypt, Morocco. I mean, we're working on it because there's huge demand. There's no question. And I think it's about the host government saying, okay, we want value added, right? We want value added. So how could you help us, grow together? I mean, first of all, you're leapfrogging electricity, so you're going to get lower cost energy anyway.
I agree with host government actually playing a significant role in setting regulatory frameworks. Actually, like sometimes we need a stick, sometimes we need a carrot, but both are needed. So with my productive in PUE experience, I was actually not the project developer. Just to clarify, I was a consultant. And here, we also work with, for example, with my Duke University capacity, we work with local universities in making sure, like, whatever we do, we're doing a project in Kenya, in Turkana, trying to actually understand the benefits of energy access on smallholder farmers. Most of the work would be done by our local partners at the University of Nairobi. I think our role most of the time depends from like a contract to contract, an engagement to an engagement, but I don't think anything would be done in like this part of the world and to be implemented in in Africa. This being said, it's also like sometimes it could also make sense for the businesses to do. Like we do need a stick where the government is actually saying you need to have local content, you need to have local ownership, and local content sometimes is tricky, especially in renewable. Like you have like 300 people doing the construction and actually operating it would be like 50 people. So you actually need to require on all levels, not only construction, not only daily laborers. We need to actually build the capacity to be able to run this mini grid or like to be able to run this like larger scale investment. But for the businesses also, like if you don't hire locally, at some point your business is going to suffer. So this is actually a business strategy most people implement, most of at least my clients implement. And I was, for example, for Enel, I was hired from Ethiopia. I was the only person working in Ethiopia because it was an early stage of the project development. They needed someone locally who understands the different aspects of doing business in the country. Like even when you start developing a project, you don't know like which ministers you need to talk to, or you don't know, okay, is this person credible or this person I'm just talking to someone I found on Google. So I think it also makes for businesses, this is like a good business strategy to work with locals.
Great. Any more questions? I'm going to just ask everybody. Oh, please. Yep.
Hi, my name is Abu Bakr. I go by Abu for short. I'm from Sudan, and I'm a student at UNC. I'm an environmental science major. I was just wondering about something that you had mentioned early on with just, the demand, starting to grow, but still not really being there in a lot of these developing countries. And a lot of it, I think, like you said, is just, houses and homes really not having the appliances to take on the demand, right? So I know you mentioned that, it's like 80, a lot of the focus is now going to agriculture, irrigation systems, and they could take on maybe like 80% of the demand by these, mini grids and these projects. Is that something you would say is a trend in many of the developing countries, in Africa especially, or is that, specifically with Ethiopia? And do you see that changing, in the near future as, homes start to take on more technological like appliances?
Yes, the 80% was actually very specific to the project, but I think we need to understand how I would see it is, like if you're setting up a business, you need to look around and see what are the opportunities in there. Like if it's in a rural area where their main business is to do agriculture, then that would be your off-taker. And down the line, you start with like small mechanizations, like processing. But also we do need industrialization. So this is not something I'm disregarding. I think as we envision, as we aspire to become a middle-income country for most of the countries in the region, the government also focuses on, like, we need electricity to actually power our industrialization goals.
Right,
So
right.
that is very, like, know something like, yes, agriculture needs electricity, but also industries need electricity.
Now, in this conversation, this sort of brought to mind industrial policy. We don't often think about industrial policy in a very positive way, but this country just did a huge industrial policy with the IRA law and the clean energy and the bipartisan. Jauad, I was just going to ask you to sort of give us your final thoughts on what do you see are sort of the key sort of industrial policy ideas or, regulations that you would recommend for some of your region, and sort of rapid fire, what is your take? Are you optimistic? Are you neutral? Are you pessimistic on emerging markets?
Thank you, GP. No, I think I'm optimistic despite the challenges. I think there is a will to go towards clean energy and develop the sector further. I wanted to pop up and come back to the point that was raised regarding the local content. I think it's very important in the next project, whether it comes to renewables or green hydrogen or else. We need definitely to ensure that part of the supply chain is manufactured locally. This is very important. I think this already we see it in the new agreements between the GCC or the North African country with Germany and others, and also capacities. I think this is very important to develop the new generation of engineers and technicians that are able to maintain and operate a different kind of power plants using, the modern technologies. I mean, the AI and the different kind of technologies in a way that we ensure that we have local capacities in the country able to manage all the project in the pipeline. I think this is very, very important. And finally, regional cooperation is important. I mean, all together, I think we make a difference in terms of bringing the finance, in terms of in making sure the interconnection is there, and helping in trading the electrons, green molecules for the benefits for everyone and for the benefit of socio-economic development of our countries.
That's an excellent point. Regional cooperation. If you have interconnections, the electricity, the system is bigger, so the electricity costs come down. Craig, you next. Rapid fire on industrial policy, and are you optimistic? And Liilnna, you get the final word.
I'm always an optimistic person, and listen, this is notwithstanding all the challenges we all know all too well. There's incredible opportunities here because we have technology that's not only climate beneficial with solar, but cost effective. It's going to power the data centers and artificial intelligence, like we heard. Your point about agriculture. There's a whole science called agrivoltaics. My colleague Josh knows more about that. But basically, we can raise the size of our peers, and our vegetation maintenance team is sheep, right? So there's lots of different policies. One other point about solar, probably 40 to 50% is capex. The rest of it is construction. It's putting it together. And so
balance of plant.
So clearly there's a lot here. I mean, one more example. I saw this in Honduras. So we had a project that we financed. It was First Solar Modules, Nextracker, and it was the government of Honduras said we want solar, and they wanted solar because why? Because it was half the cost that the electricity was. Because otherwise, what's their alternative? Bunker fuel that they have to import, and they have a 30-year volatility, and so the way that we did that, rather than the transaction cost for, a 52 megawatt project, we found Banco Atlantida, and so U.S. Exim Bank lent Banco Atlantida the money, and then they on-lent it to the local Ciesa was the developer. So, it was a plus. It was a win for them. It was a local company. Project company that owned the project and developed the project. There was a lot of training, obviously, from First Solar and from Nextracker to that local team. So clearly you can have those partnerships. Yep. But I'm all for industrial policy. That's how we put a man on the moon, but more about that later.
I'm also very optimistic, and this coming from a lawyer, you can understand. I mean it. So I'm optimistic because looking
You're an
at,
economist and you think it
I'm actually a lawyer.
is? Okay. Oh, you're a lawyer.
Yes, I'm a lawyer by training.
Oh,
I
wow, I should have
pivot.
known that before we had
Yes.
this conversation.
Yes. So I think like looking at the resources the continent has, most of it is renewable, most of it is solar and wind and geothermal, and looking at the attention from the capital provider. So we're in a very good moment where attention is all given to clean energy, and we're doing it because it makes sense for us. We're building all of these solar mini grids, not about because solar mini grids make sense. If it was not solar mini grid, it would have been like diesel pumps or anything, which was going to be like many times expensive.
Yeah.
So we're actually heading towards where the attention is being focused on. So
Yeah. And on that note, please give the panel a round of applause and thank you very much for staying around